Guys, housing is incredible right now. We just hit a record. I didn't realize this was a record the other day. 10th month in a row of builder sentiment being down. That's even worse than 06, 07, 08, when housing was considered the reason for the stock market plummet.
Oh.
Wow was right, Mo. And the reason being is we saw a time just in the last year where you literally had lines outside the door for houses to buy them, right? People were sitting there saying, and of course, if it's hard to buy homes that are existing, you better believe that new builds were going to be insane.
Yeah. I had a friend during everything that was happening in the housing market. He had a home in Lakewood.
Yeah.
It was listed for about 180. On a Sunday, they opened it up. They had about 36 showings, offers way over ask, and he sold it for 240.
240 from 180?
240 from 180. And he was like, whoa. He was shocked. Absolutely shocked.
Well, you know, Tim likes to go look at houses on Sundays, and he said he used to go to houses and it'd be like lines at the door. And then he recently went and it was literally nobody. They were the first one. They were the only ones there that came into the house. Yeah. Guys, it's harder out there. But guess what? The pendulum swings. And we talk about this, and yes, we're considered the boring guys and the market's booming. Everybody's like, you're crazy, you don't get it. But then you sit there and say, wait a second. At some point, something's got to give. And what happened was inflation. Yep. There's always going to be some reason. And inflation hit. And when inflation hit, all the government could do to fight it was say, we're going to raise rates a lot. And guess what, guys? There's a meme out there where it has Prince Charles sitting there, and it says at the top, and I sent it to my fiance, and then Mo sent it to me, and it said, how you feel when you locked in your 30-year rate at 2.65. And I sent it to my fiance because she locked in at 2.625 for a 30-year mortgage.
I remember when she
And now look at them.
Look, this is from thirdfederal.com. This is the 30-year fixed rate right now. That is coming from Third Federal.
6.89.
6.89.
So that's 4% higher, which means if you borrowed a $300,000 mortgage, your rate versus a year and a half ago is $1,000 per month more. And even if you make $150,000 a year, which is about $100 after taxes, that's 12% of your after-tax income just from that mortgage. Now, it's a ton.
That takes people out of the market.
But does that mean we're going to have a housing crash?
No.
Not necessarily. And I'm not saying we're going to, I'm saying we're going to. But I always use this data point because I want to explain to people how inflation does help. In 1975, the average rate in a 30-year was 9%, and the average median home price was $32,000. In 1984, the rate was 13.5% or 13%, a 50% increase. Now, it's not going from 2.6 to 6.9, but these are still high numbers. And the average price of a home, median price, was $81,600. So even with this massive increase of interest, home prices still went up. Why? Mo, why? Inflation. Okay? Inflation causes all costs, materials and labor to go up. So if you bought a house for $32,000 and inflation, let's say, cost of living doubled in a 10-year period, the cost to build that exact same house is going to be way higher. Let's say it's $65,000, $70,000, $80,000. So is your house worth $32,000 anymore? No, of course not. Nope. And that's the key to inflation. Now, it doesn't change the fact that right now, those interest rates are a real cost for people.
Yes, they are.
And if you were planning on moving in the next couple of years to upgrade, I want to pump the brakes. But here's something that I haven't mentioned yet. If you bought a house as a starter home or your second home, you're planning to upgrade. This is what I recommend you doing. And I told Tim to do this, but he didn't do it. He regrets it, but I understand why. Keep your low rate on your previous home and rent your home out. Rent your home out, because I shouldn't say guarantee. I'm very, very convinced that as interest rates go up, inflation goes up, what happens to rents?
They go up.
They go up. So when rents go up, that same house that you're sitting on at a low rate, you're going to get much, much higher rent, and your mortgage price stays the same. Your mortgage payment stays the same. So go rent your house out. Become a landlord. Go build that equity in your home. Mm-hmm. Go build that cash flow for yourself. As an example, my fiance, when she bought this house, she paid $315,000, and it's now worth about $400,000. Her current mortgage is about $2,000 a month. If she were to sell that house, she would put a few bucks in her pocket. But now that same home, we can rent for $4,000 a month. And in a year and a half when we move to our new house, maybe it's $4,500 a month if inflation stays up. So my question to her would be, would you rather get your check for $100,000 or whatever it is, or would you rather generate $2,500 extra per month in cash flow, pay down some debt, and have an asset growing?
Yeah.
But builder sentiment is bad.
Yes, it is.
It's really, really bad out there.
Didn't you say housing starts fell 8% or something?
Yes, housing starts fell 8.1%, worse than expected. That was coming after a rise of 13% in August, but in September it was down 8.1%.
And you do have a lot of these big home builders, Pulte, Ryan, et cetera. They're the ones saying that, hey, it's getting pretty bad out there.
Are they saying that?
Yeah. They're like, they've said we are in a recession.
So I think it kind of like irks me when people are reactionary to things, because to me, when we were making videos saying, listen, this is great, but it can't sustain forever. You can't have everybody putting 40 offers into a house, having a $180,000 ask price, selling for $240 forever, right? You just can't do that.
It's crazy.
Another anecdote. Go out there and hire a contractor today versus a year and a half, 2 years ago. A year and a half, 2 years ago, when I want to hire a contractor, I was being told, Paul, either I can't start for 6 months, or Paul, I'm booked out for a year, year and a half. I can't touch you. Now, I have 4 contractors bidding on my house to do a renovation, one of which says I never bid. And now he's bidding.
Wow.
And the one guy gave me one of the 4 is giving me a partial quote already. And he said I can start November 14th. November 14th. That's less than a month away. By the way, we're not ready to start November 14th because I got to pick a contractor, get permits, all that stuff. But the point is,
last year we'll start November 14th of 2023.
Exactly. Yeah. So these are the shifts in the market. But I want you to remember that if things get worse, they won't stay bad forever.
No, they won't.
The Great Depression happened.
It's a cycle.
Things didn't stay bad. Exactly. There's a cycle. There's a pendulum. It swings from side to side. Your goal in listening to our channel is to understand that you have a long-term outlook on things. And you're sitting here today, and you have to take the data in from today and say, what does that mean about the future? It doesn't mean when are the events going to happen, how bad it's going to be. It's just saying, I'm going to react today to what I see today.
Yeah.
That's it. And with home building, when people in the last year and a half, we had a lot of users saying, boy, these home builders look really good financially. And I always said, yes, they do. But what happens if we have another big fall? I don't know if we're going to, but you're seeing all the cancellation rates. You're seeing home builders. I'm hearing home builders talk about now, it's about conserving your cash. Now, that's a very cliche statement, but let's look at PulteGroup right here. So, Mo.
Yeah, I'm trying to see if they have any data coming out. So, revenue of looking at the quarterly, it's pretty after having that big boom in growth here, it's been pretty stagnant decline, actually. So it's starting to have that decline. And if we go back to 2008, 2009, these companies got blasted in revenue and income. Blasted.
Of course. And the question is that going to happen again? Well, we didn't have the inflation back then.
Right.
The other thing is the demand. I don't know where the demand and supply issue is. Like, demand's really waned. We have a good friend of ours, Hesh, who runs a mortgage business. I haven't talked to him in a while, but business was down a lot this year.
Right.
I need to talk to him and say, hey, if somebody was telling me refinances are still out, I'm like, who the hell is refinancing your house?
I think the last quote I saw was down like 84%.
I mean, it's got to be.
Who's going to refinance?
Unless you have a ton of equity in your house.
Yeah.
Or you own your house in cash, you need some cash.
You need some cash, but
it's a cash out refi.
Right.
I don't understand who's refinancing these days, because literally 2.5, 2.6, 3% to 6.8. I just locked in my mortgage for my renovation. I got 4.25, and
that's fantastic.
I told Lisa the other day, and she goes, "Oh my God, so low." And I'm like, "That's why we need to finish the house." You know what I mean? It's like, because guys, these are cycles, and I'm not here to sit there and say this is good or this is bad. And in the terms of, there are good and bad, but the world's not falling apart. Could it fall apart temporarily? Maybe. The world fell apart in the Great Recession, and guess what? We came out stronger. The world fell apart when the dot-com boom must happen. We came out stronger. The world fell apart in the late 70s, early 80s with energy and inflation. We came out stronger. Every single time in history that there's bad things, it leads to better times. It's just about being there with the right mentality, the right emotion, and the right process. And mentality and emotion are the hardest parts, but that's what we try to focus on this channel. Mm-hmm. We do 3 or 4 videos a day for that exact reason. So you really need to subscribe right now to the channel if you're liking what we're saying. So let's go back and look at some more sentiment. Home builder.
I want to ask you a question.
Yes.
Real quick. So I look at, as a person that's not done real estate in the past, I look at Pulte and these types of companies and say, I kind of want to listen to what they say, because they deal with the supply side. They deal with the selling side. They do everything in that business. Is that a good way to look at it?
Yeah, there's also a bias in there.
Of course there is, yeah.
I'm trying to figure out where the most unbiased source would be. Because even the National Homebuilder Association, I don't know. Like, it's a hard thing to determine. I think for me, it's about being able to hear them. When somebody says like it's all about conserving cash right now, I'm like, well, shouldn't it always be about conserving cash in essence? No, I get what they're saying.
Yeah.
These companies have very little debt, guys.
Right.
Like, look at their inventory versus cash.
And that's the interesting thing about these companies. They have very little debt. And you would think for what they do, or how they're buying out supplies like crazy to build like crazy, you would think they would have more debt, but they don't.
Yeah, that's the thing. It's just like, so look at the balance sheet for Pulte. They have $12 billion in cash and cash equivalents. Total debt of $6 billion. That's
weird.
Right? And that $12 billion, inventory is $10 billion of it. Okay? So let's say you have to mark down that inventory by 30%. You're going to take off $3 billion. You're still well over your total liabilities. But that was the same way it was in 06 and 07, and they still fell 80, 90%. So this is the part of the emotional side that if you're in tune and you're strong about it, you can take advantage of these times. Mo, pull up the Pulte chart going back to 2000.
Oh boy, I bet they had a big dip in there somewhere. Let's go back. Max, this is 2000 is right here. Look at that big spike. And then that was recession.
They're below their 2006 peak.
Yeah.
Isn't that interesting, guys? So their peak in 2006 was how much? $48. They're currently at $37. Let's go look at their revenue. $15 billion this year, in the last year. And in 2006, they did $15 billion. So if I told you in 2006, and I've said this in other Pulte videos, that if I told you in 2006 that we're not going to see this revenue on Pulte for another 16 years, you'd been like, dude, you're stupid.
Yeah.
Guess what? It fell all the way down to $3.98 billion and took all that time to rebound and finally just hit $15 billion this last 12 months. 16 years of no growth in revenue. I remember there was a time when I was buying land from Pulte. I was actually buying land from Pulte for literally pennies of what they paid for it just a year before.
Really?
Yeah, absolutely. Because I remember the person, the biggest piece of land I bought from Pulte, I knew the person who was at Pulte when they bought it. And his comment was, it made sense at the time based on the houses we were selling. And his job was to do what?
Do exactly that.
Exactly. My job was to get deals done.
Right.
So you can't exactly blame them for that. Their job is to sell. Now, they've changed their business model a lot over the years. Pulte got in a lot of trouble because they weren't like Ryan Homes. If you don't know Ryan Homes' business model was, we're going to go into contract with you on the land. You buy the land, you develop it, you do everything, we're going to buy it for X amount of dollars. Well, what they don't tell you is, what you don't realize is that if they can't sell lots, they're going to come in and say, hey, we can't buy your lots, sorry, and you're stuck with land. But we'll buy it from you. Instead of $40,000, we'll buy it from you for $30,000. And as a landowner, you might be like, well, it's better than nothing. Pulte was actually buying the land and rent and putting the money in, all that stuff. That's why they got a lot more financial situation with it.
Got it.
Home builders in general. Everybody out there knows contractors. Everybody knows home builders. Find the ones you trust and just say, hey, how are your orders coming? To me, I just look at these small anecdotal things and just say, man, but again, it doesn't mean if we have inflation, it's going to solve a lot of the home value problems. It doesn't help home builders necessarily, but it helps you as a homeowner if you own a home right now.
Right.
That could still help you out a lot.
Right.
And if you live in a home that you love, who cares?
What does it matter?
Right? By the way, Mo's looking at building a house in Florida.
Yeah.
I would sit there and say, buy the land and wait a year.
I know. That's what I'm thinking about doing.
Because the prices you were getting were like $400 a square foot. I was like,
crazy.
Jesus Christ.
I know, it's crazy. And there's definitely a premium still being tacked on. And when I heard the housing starts number, I was like, at some point, these builders are going to start coming for a little bit. The tables are going to turn.
You know how it's going to turn?
More control.
You know what's going to turn? The builder who hires a sub, the sub is busy now in previous jobs. When they start seeing that the pipeline is decreased, they start laying. We're starting to see CEOs talking about laying people off and things like that. It's a cycle. It takes time. Like, I wish we were doing a renovation like a year.
Yeah.
But good luck telling Lisa to do that. Like, that's not going to happen. But I really wish we were, because I'd love to be able to wait a year and just wait for
everything to settle,
labor prices to settle.
Yeah.
But anyways, guys, this is what we talk about the channel. It's a conversation that we have a lot of the times. It's just about thinking about things logically and trying to remove as much emotion out of it. Emotion is very, very important in everybody's life. I have it with all my investments too. It's just I've been able to temper it a lot more and take a 500-foot view of a long-term future of the investment. So like that, you need to subscribe right now, or else you're going to miss out on a lot of videos, because we do 20 videos a week, instant reactions to a lot of things. Subscribe right now. You won't regret it.